Jamie Dimon, CEO of JP Morgan Chase, and other financial leaders will talk about where they think the U.S. economy will go in the next few months and what rate cuts they think will happen. I also keep a close eye on the U.S. economy and other things and have a lot of up-to-date knowledge about them. In my live chats, I talk a lot about this. But look at all of that study and data right here. You will have a very good idea of where the economy is now and where it is going after watching this video. Let's go. I believe the economy is getting worse. I'm not sure if that means the economy is going into a recession or is just getting weaker. And that kind of backs up what we already thought. I understand that's a big change. People want to know what's going on with consumers right now, which is kind of related to our last point about the state of the economy and how hard it is to predict. They still have money to spend. It's a little different for people with different types of pay. They still have jobs. People tend to respond to that. There are a lot of different things going on in the market right now, such as falling consumer spending and comments. At the same time, corporate profits are still going up. It's hard to know what it all means, and that's why I've always been pretty skeptical of most predictions. We need to wait and see. There is also a lot of information out there. The Fed hasn't said what they'll do. Rates will probably go down, but I don't think that'll be because of the market. Let's see. Next week they'll cut. Yes, they are going to cut. I believe 50 should be cut. They're likely going to cut 25. It will depend. The CPI number that comes out tomorrow or Thursday sounds interesting. I think they should go 50, but I think they'll only go 25. After that, we'll start making the rate go down. Still, you can put together a portfolio to get this kind of profit. Plus, you can still stay in the front to the back of the yield curve and get that return. We've been giving you a little more room because now your real rates are really cool. Get the interesting things at real prices. Now these real rates are fine out of the curve if inflation is around 3%. At this point, your old peer or colleague Jamie Dimon has said that the economy is getting worse. Do you think the economy is getting worse? To begin with, I believe it is complex, and that sound bites are very hard to take out of context. And I put them into two groups. The first thing is what our own data tells us. The second is what you see in a bigger picture. We have a lot of data that shows that things are very stable. To give you an idea, I know you guys talked about this morning. Sometimes customer spending stays the same from one year to the next. Credit is as good as it's been in the last 6 months for people of almost all income levels. In fact, it's probably going in a better direction. Companies are doing really well. We look for signs of any kind of change, but you don't see them. Anyway, there is a big difference between people with better incomes and people with lower incomes that stays the same and is a real problem. And when you look at the numbers for all the jobs, it's clear that they are being created. So yeah, things do feel pretty good today, at least compared to what you think they might be. But, it's not the same for people of different levels of wealth. Also, there's probably more bad than good about it. This is how the high-end and low-end consumers spend their money. Okay, let's move on and talk about how the clip was a little slow. I'm truly sorry. I thought X was having some tech problems. Also, I just wanted to quickly show you this. I think this is one of the most important economic questions of our time. This is Scott Bent, the U.S. Treasurer, telling you where he thinks things are going. This happened about a month or two ago, but it gives you a better idea of where I'm coming from and what I'm about to show you. Will the world's two biggest economies continue to drift apart, or is it possible for them to adjust together? Senator Trump wants the U.S. economy to get back on track by making more things and lowering the trade imbalance. The Chinese are continuing to make more things. At the moment, they make up 30% of the world's capacity, which is a big increase since 2020 when COVID was first announced. They made the volume bigger. They are in the middle of a big slump in the real estate market. It might be called a crisis by some. They don't spend much money on things. In order to rebalance, they need to spend more and fix their own problems, but they can't make the workers of the rest of the world do it for them. We could work together to make that happen, if they are willing to be good partners and negotiate in a way that allows the U.S. to bring back high-paying, precision manufacturing jobs and also lets American goods into their economy. Okay? So the whole point of the trade war and tariffs is to bring factory jobs back to the U.S., right? Manufacturing jobs that pay well. Let's take a look at the big picture and see how the economy is doing. I also want to show you some information about industry and what that means for the U.S. job market as a whole, and see if it makes sense to keep doing what we're doing. So here's a quick look at the U.S. economy. In 2025, the economy has slowed down a lot because of things like higher tariffs, tighter monetary policy, and trade issues around the world. After falling by 0.5% in the first quarter, real GDP rose by 3.3% annually in the second quarter. However, the overall growth for the first half of the year was only 1.4%, which is less than half of the 2.8% growth seen in 2024. Forecasts say that growth will be less than 1% in the third quarter and will only slightly improve in the fourth quarter as the effects of the One Big Beautiful Bill Act's fiscal boost measures start to show. The amount of money collected in tariffs so far in 2025 is 183.6 billion naira, with a record 31.4 billion naira earned just in August. Who has to pay the fee? Importers and businesses in the U.S. pay the tariffs immediately. Most studies show that U.S. companies have to pay more than half of the tax costs. According to a new study, 86% of taxes are paid for by businesses and people in the U.S. According to new figures, U.S. businesses will pay a little more than half of the costs of tariffs in 2025, and the consumer share price will rise above 67% in the next few months. It's actually a lot better. What it means for companies and farmers. Farmers and U.S. farm exports to China fell 39% year over year. Soybean exports are expected to lose more than 25 million metric tons, and corn exports could drop by as much as 90%. Right now, we sent about $12 to $14 billion worth of soybeans and corn to China last year. Well, nothing this year. For farmers in the middle of the country, that's a big hit. In the first half of 2025, the farm trade gap grew to $28.6 billion. As of August 2025, the unemployment rate is 4.3% and has been going up since October 2021. Only 22,000 jobs were added in August, which is a lot less than what was expected. Every year, change. Between April 2024 and March 2025, the U.S. economy lost 911,000 jobs. It's interesting that you should bring this up because I said several times in my live streams that the economy was already slowing down under Biden. And even though Trump came into office to try to get industry back on track in the U.S., the rules he put in place have made it much harder to create jobs. What's making jobs speed up? AI is also at fault here. A few years from now, 20 to 25% of all jobs will be taken over by AI, robots, or AI. I don't think more people know this. Also, if you think AI could take your job, you might want to learn more about how to use AI so that your skills are better than those of the people you work for, like the person next to you. They'll probably keep you and pay you more if they see that your resume and your friend's resume are the same. The other problem is that a lot of the $186 billion paid by U.S. companies comes from U.S. consumers and businesses. There must be ways for these companies to save money, right? They used to have an extra $180 billion, but now they don't. Let's talk about the best and easy way to save money. Anyway, they should be able to save a lot of money if they get rid of some workers and start using AI everywhere they can. So I believe that all of this will soon catch up with us. And sadly, this will lead to a lot of bad things. This is what I think going forward. In August, the rate of inflation was about 2.9%. The cost of housing has gone up by $4 per month,